Hello everyone and welcome back to The Masterminds, How to Invest in the Stock Market. Okay, you're in lecture 3, Portfolio and Risk Management. So let's get started. Let's define risk first, okay? Risk is generally categorized as the chance or outcome of an investment's actual return and how it will differ from the expected outcome or return, okay? When it comes to portfolio management, managing your risk is of utmost importance. And the way that portfolio managers, investment advisors, and financial advisors do it is by diversifying your portfolio by asset classes. Okay, so let's get into what an asset class is. An asset class is a group of securities that exhibits similar characteristics in the marketplace and is subject to the same laws and regulations. Okay, there are three main asset classes. Number one, cash and cash equivalents. Okay, number two, fixed income or bonds. And number three, equities. Okay, so an asset class, okay, will essentially, how you diversify your portfolio will determine your risk, okay, and the risk that you're willing to take, as well as your return. Okay, if you have a portfolio that's not well diversified, you will assume quite a bit of risk. If you have, on the other hand, if you have a well-diversified portfolio, okay, you will essentially be able to weather the ups and downs of the markets better than if you are, if you take quite a bit of risk. Okay, so picture actually on one of the PDFs, I want you to take a look at a graph that's going to show on the left-hand side the potential return. Okay, and on the horizontal line, it'll show the potential risk. Okay, so the graph will essentially show you by asset class the return, okay, that you may expect given a risk that you're willing to take. Okay, so with that, okay, I want you to have a read through the PDFs that I'm sharing here, okay? But I wanted you to essentially understand what risk is and what asset classes are, okay? The asset classes, let's run through them once again. The cash and cash equivalents, okay? So cash is essentially money, liquid money, okay? Now, the cash equivalents may include money market, okay? T-bills, treasury bills. A money market, what's a money market? It could come in the form of a mutual fund, okay? Or it may come in the form of a security that's issued by either a government, okay? Usually a government, okay? Or it may be even a corporation, but it has to be a corporation that's very solid, that has solid financial statements, okay? But also that is backed by their own cash or another security that's really secure. Okay, so a money market, as far as a mutual fund is concerned, let's talk about what a mutual fund is first. A mutual fund is an investment, okay, that's managed by a professional money manager who will invest your funds on your behalf in the stock market. However, they will invest only in secure short-term investments. Okay? So now you know what a mutual fund is. So with a money market mutual fund, that mutual fund manager will invest that money in those secured investments. You're not likely going to get a high return from a money market mutual fund. Okay? On average, a money market mutual fund will return anywhere between 1 to 3%, and it'll depend on the interest rate environment. Okay, if interest rates are high, you will get a better return on a money market. Okay, now let's get back to the asset classes. The cash and cash equivalents then have low risk, the lowest risk, okay, versus a fixed income or a bond, okay. What is a fixed income investment or a bond? A fixed income investment would be a security that's issued by a government, okay, whether that's at the federal level or the municipalities or what have you. It's issued by a government, and they guarantee that they're going to make a payment to you based on their own financial statements. Now, we know that governments in Canada and the US and some of the European countries, okay, like the United Kingdom and so forth, they have very healthy financial statements. And therefore, the risk with a government issued security is lower than with a stock, okay? And so therefore, the following asset class, okay, after money markets is a fixed income investment, whether it's issued by a government or a corporation, okay? Now let's talk about a bond. A bond essentially is, whether a government issued bond or a corporate bond, is again an instrument that pays you a fixed income, okay, and will return your principal at the end of a period. All right. So now we know what a fixed income or a bond is. Okay. Now moving on to the risk and return spectrum. The next investment, okay, that carries more risk, but also will provide the highest return is equities. Okay, and equities can include stocks, it can include derivatives, it can include options. Okay, at the lower risk is just stocks. Okay, so for instance, if you wanted to invest in Apple stock, okay, or if you wanted to invest in Samsung, okay, again, Samsung stock, or one of my favorites, Netflix, okay. You would essentially be acquiring the same risk that the company takes in managing their own business, okay? So you're buying a share of ownership in that particular company or firm, okay? Now, derivatives and options, I'm going to leave that for another video, okay? I hope you were able to understand what risk is, okay? Read the PDFs on risk. Read the PDFs on risk management, okay? And I will see you next time.